Gold and silver prices pulled back below the 5,100 thresholds on profit-taking and heightened market volatility risks, with recent pressure added by the Fed re-election hawkish re-election risks. Now, as Middle East tensions persist, keeping oil gains near 5% for this week, upside risk across commodities remains in focus. So we'll be starting first with the gold chart, and this time from a 3-month time frame perspective to be able to zoom out from the current heightened volatility and to be able to visualize the current price action relative to the overall trends history all the way since the highs of the 1980s. Now, from the 1980s, we can see that price action has been consolidating, has been forming a consolidation all the way towards 2025, where we had a bullish and exponential breakout extending all through January 2026. Now, yesterday we reached the 5,600 mark before we saw a sharp drawdown beyond 500 points on the gold chart. We have heightened volatility risks from both the upside and downside over here, which is calling for proper or careful risk management in terms of positioning in line with the overall directional bias. Now, the broader uptrend remains to the upside. However, high volatility risks as we reach the full potential of gold's breakout remains critical on the charts. So in terms of technical analysis, when we have a breakout beyond the consolidation, we tend to take the distance, measure the distance of this consolidation and project it in the direction of this breakout. Now, if we're going to look at gold prices from that very broadened long-term perspective, we can see that the overall targets for gold can go all the way beyond the 10,000 threshold. Now, over here, we are experiencing a bit of momentum fatigue across the markets, profit-taking, also risks across the markets amid heightened volatility between the overall sentiment, heightened Middle East tensions, and the overall headline sensitivity between a weak dollar. Now, recently also we have Trump's support for a new Fed that is perceived to be hawkish for the markets in terms of rates and policies, although Trump is leans more towards dovish rate policy and lower rates across the market. So all of these combinations, all of these factors are currently implying heightened volatility risks on the current price action, which has the ability to have or trace a drawdown up to 1,000 points, as we were only 1,000 points also down approximately 2 weeks ago before reaching the 5,600 mark. Now, yesterday we had an approximate 500 drop, and until today, we had an approximate 500 drop drawdown, reaching the 5,000 threshold. We reached the 4,940 approximately level before rebounding now above the 5,000 mark. So we're currently in the zone of, in a critical support zone. Now, a clean hold below the 4,900 mark, a critical support zone and dip buying zone, can potentially extend losses all the way down towards the highs of 2025, which are near the 4,550. And that is another 500 points on the table should prices make it below that 4,930 barrier. Now, if you drop to the 4-hour time frame, we can see the price action is trying to hold above the 4,930 mark, which aligns or can be derived using the Fibonacci retracement tool placed between the trend, extending between December 2025 all the way to the highs reaching January 2026, where we can see the alignment with the 0.5 Fibonacci retracement near the previously mentioned 4,940 to the 30 mark. So this is a very critical level. The previously respected level, which was last night, was the 5,090, which is the 0.382 retracement. Now, a clean hold below this level is expected to extend losses all the way down to the golden 618 near 4,781, followed by the 4,550, as previously mentioned on the longer time frame, as it aligns with the highs of 2025 for also potential dip buying opportunities, as the relative strength index indicator is approaching oversold zones last seen also in December 2025, in line with the persistent geopolitical tensions across the globe that are keeping the haven appetite alive, and the buying and upside risks across commodities also in focus. Now, in line with the previously mentioned profit-taking and heightened volatility risks seen across the markets between yesterday and today, promoting the overall more than 500-point drop across the gold chart is also aligned with the gold volatility index surging to highs last seen in 2020, also promoting an overall exhausted and top risks across the markets that are also expecting a steep momentum recharge for both gold and silver prices for them to be able to continue that overall broader uptrend forecast.